Hello to all traders and welcome back to another video brought to you by Orbex. So a lot of investors and traders alike are still digesting the news of what Fed Chair Jerome Powell did testify at the Jackson Hole Symposium in the last few days, saying that he would still aggressively raise rates until inflation does come down, and that the US economy in general will be in a little bit of pain until that does happen. So a lot of investors have already priced in that there will be possible 75-point hike or at least a 50-point hike in the next meeting this month. But what will that mean for the American economy in general? Well, they're looking at two sets of data, which is the Consumer Price Index and Consumption Expenditures Price Index, that have given a little bit of a flat reading in recent times. So they're basically going to see over the course of this next month what the next data will bring in and whether or not there will be a third consecutive 75 percentage point increase in that respect, or if it will just be 50. So there will still be rises and it will still cause a lot of havoc in the market as well. Speaking of that, we saw the Dow plunge over 1,000 points since this has happened. S&P and NASDAQ are also on the downturn, but it's the Dow that seems to have been mostly affected in the last few trading sessions as well. So will we see another advance in that respect? We'll have to wait and see. But you know, the remarks say that inflation may have peaked, but it's not showing any signs of decline yet. So is that just a bit of a false testimony from Jerome Powell? Well, as I said, the markets have reacted and reacted well, in the sense that bears have really started pushing down the Dow quite significantly. As I said, it was 500 points that it did affect the Dow upon the news release, but it has kept on pushing lower since the news and on Monday morning as we look at the markets now. But the Dow, what I was tracking quite modestly, is we were in for a slight correction anyway without the news from Fed Chair Jerome Powell, because we were on this move to the upside. So we were expecting another turn down, and then possibly now it could have found its bottom in the near term at least. But with the assistance of the Ichimoku cloud, what I can see here is that we are still trading above the cloud, which gives us an indication that we are still in a bull market, even if we have had a bit of a correction to the downside in that respect. But if we look on the 4-hour chart, most importantly, what I've been tracking now is we have plummeted through the cloud, as you can see here, which gives us a bias to the downside and another leg lower. So will we have another upturn? Well, we'll have to wait and see. We have been consolidating nicely since the market did open in this for this new trading week. But more interestingly enough, we were seeing a slight divergence on the RSI, which could give a slight bullish signal, but we have actually now dropped lower. If we didn't drop to this particular area here, we would be seeing this divergence to the upside, and that could give us more of a direct benefit to what could get us out of this downturn. But if we're looking on signals, just be aware that we were seeing a slight divergence, but then obviously, as I said, it has actually not come into fruition. So the next level for me will just to see if we can bounce out of this consolidation phase and then start recovering to possibly, I would say at the moment, a good psychological level is getting away from 32,000 obviously, so 33,000 will be the next one. But if we can half this to 32,500, this will be a very good starting point in the beginning. So lots of eyes on the next Fed decision, at least this month. But it's a few weeks away yet. So we'll see if that comes into a good spell for the American economy. Looking on the S&P very swiftly, we've had a very choppy market for the S&P in the last few trading sessions, but that was again in a slight bull market, similar to the Dow Jones. We've had a bit of a correction now, so we are expecting a slight bottom before moving higher in that degree as well. So will we get this all-important upside move for the S&P? We'll have to wait and see. But you know, if we're looking at fundamentals, if we're looking at the next technical outlook for these indices in America, then it is actually very fundamentally driven at the moment. We are coming off the back of the earnings season as well, so that's something to take into consideration as well. But for the Dow and the S&P, as I said, we've had slight corrections to the downside. We're waiting for this bottom to commence and possibly give us the next signal. There's not really many divergences on the RSI here. I'm just looking on the daily chart for the S&P at the moment because it's pretty similar to the Dow as as well. So I don't want to take you to too many boring scenarios. But if you're trading on the NASDAQ, S&P or Dow Jones, just be careful that you're in the mix of the American economy news. So it's giving you the best value and the best signals as well. So join me tomorrow for the next installment of the Market Insights video, and we'll speak again then. Bye for now.